Welcome to Stay Focused. I'm Kelvin Law. Our topic is commercial mortgage. My guest is Ted Capodilupo. He is the owner of Assist to Finance. Ted has 25 years of experience as a mortgage professional, and he specializes in commercial and residential mortgage. Welcome, Ted.
Thank you for having me on the show, Calvin.
Thank you for being here. So let's talk about what is commercial mortgage, if you will. So the first question is, what type of properties that are eligible for commercial properties? I'm sorry, what type of properties that are eligible for a commercial loan, and what type of properties that are not eligible for commercial loans?
Okay, good question.
Thank you.
Commercial lending basically encompasses any kind of business entity or commercial influence. It usually falls under the realm of anything that's over a 4-unit building. So where a 1, 2, 3, or 4 unit would be financed under the residential world, anything over 4 units would go into the commercial arena, and it's got different guidelines. And it's got different guidelines in residential lending. There's different criteria that we looked at.
I see. Yeah.
For ineligible properties, mostly, we will finance almost any kind of a building, as long as the use of the building isn't, in non-compliance with the city or state guidelines, or if there's a business being run in the commercial entity that is looked at unfavorably to a lender. A lot of businesses won't finance to, let's say, a church. I personally have done several churches, so I do have lenders that will do a church in a non-denominational church, where other banks will look at that and just say no, no, thank you. So.
What about nonprofit organizations?
We can still do nonprofit organizations. I have, being a mortgage broker, I have access to all different types of lending sources, not just one. So if a person walks into a bank, they may ask to have their commercial loan evaluated, and it may not fit the menu. So it's beneficial to come to a guy like myself, who over the past 25 years has built a very, very vast network of lenders, lending sources, people that are willing to loan the money to, all kinds of broad spectrum of people.
Well, that's good, because you want to be diverse, and you want to be able to help, different clients with different situations, if you will. So
that's the key.
Yeah, that's the most important thing.
Correct.
No, so in terms of what is the difference between a commercial mortgage broker versus a commercial lender?
Okay. Well, a commercial broker, as I was explaining, is someone like myself who isn't tied to one specific bank and guideline. A broker, similar to an insurance broker, will look at your scenario, look at your own credit, what you're bringing for down payment, what the building is, and a person like myself will fit you with that specific lender that's going to want to do your deal. Whereas, a lender is the actual person giving the money. So I will definitely take you to a lender who actually write the check and give you the money. However, it's more beneficial to use a broker because we know where to take you. We know where we can minimize your stress in the process and brain damage, and because it is a little, as you know, it's a little bit difficult to obtain a mortgage.
Right.
So using a broker like myself, we're gonna take you down the path that's going to be beneficial for you.
And also can give the buyers peace of mind, I guess.
Correct.
Yeah.
You're right. Exactly.
Okay. And so basically. Now, as far as I know, as a mortgage broker versus a professional who works for the lender, now you do like work on weekends, stuff like that, right? And your times are more flexible in comparison to a professional who works like for the lender. Is that correct?
Correct. Well, okay. I make myself available. I know that in this industry, whether you're buying commercial real estate or residential real estate, you're out on the weekends. You're out Saturday afternoon, Sunday afternoon, seeing open houses, looking at buildings, and you need to act on things. So, I've always, for the past, 20 years, I've been around. When you need to buy a house, just call. And we usually get, I'll get back to you over the weekend where we can put something together pretty quickly so you don't lose a property and you can act on it pretty quickly.
Right. Okay. So it's always good to be flexible, especially where the hot market took place, because if you waited, then the chances are you're going to lose out on the property.
Correct. Yeah. Correct.
On commercial properties and commercial loans, what is the minimum down payment required?
If you're buying a building, let's say you're buying a commercial building, 5 units, 6 units, I feel comfortable saying 25% down. Some places you'll talk to, and I actually talk to some of the banks that I do business with and pitch the deal up front, and they say 20%. And then inevitably at the end, halfway through the transaction, for some reason or another, they want you to put down the extra 5. So in my experience, and obviously I like to come out of the box with the reality. There's a lot of guys out there in the industry, they'll tell you one thing, you can put down 10%, don't worry about it. I'd rather be honest with people, tell them the real story, be upfront with everybody, and instead of having surprises. So yeah, is there a bank out there that might do 20%? Potentially, but I feel more comfortable doing 25 and up, and that's pretty much the ballpark. Now, if you're doing a building, let's say you own a pizza place, and you want to buy a pizza place, and you're buying the building. If you're going to occupy more than 51% of that building, you can take an SBA, which is a government-backed loan, and you may be able to get in with as little as 10 or 15% down, under the 7A program. So, again, the way I look at things, Calvin, when people call me, I interview them. I ask the questions that need to be asked. I take you through the process. People might think I'm being intrusive, but at the end of the day, I want to know everything. I want to know what your credit looks like. I want to know what a personal financial statement looks like. Do you have any bankruptcies in the past? Telling me everything up front is only going to help you in the long run. I look at that interview like a doctor looks at an X-ray, and when they see something on your X-ray, they're going to address it. So if you answer a question a certain way, I'm going to address it, and we're going to solve the problem or figure out a way to move forward.
I think it's important because in a commercial loan, it's a little bit unique than a residential loan, because in a commercial loan where the risks are high, and also there are a lot of financial analysis, and also cap rate analysis, if you will.
Correct.
And basically, the lender will usually look at the numbers. And so the loan process is a little bit complicated than residential mortgage, and so I think the more down payment, the chances of getting a loan is much easier, and also the higher the cap rate, the less risks is going to be involved with a investment property or a commercial property. And so, what is SBA? What is the term of SBA stands for?
A Small Business Administration.
Okay. Yeah. So
it's a government product. Basically, I have the ability to go direct to the SBA to get an underwriting decision. We've got that connection. A lot of times, what will happen if you're going to go through an SBA with one of the local banks, they're going to do their due diligence and their underwriting, and then they're going to send it off to the SBA to get a government guarantee. Might take a little bit longer. We go, like I said, we go direct to the SBA and get it signed off quicker.
So in a conventional commercial loan, and I think that is quite different than a residential mortgage. So in a commercial loan, what type of documents that you need to submit to the lender or to the investor from the buyers? If you can share that.
Sure. Well, we would have a standard application, commercial loan application. It looks similar to the residential 1003. We're very, very concerned about your personal financial statement. We would get a personal financial statement from the borrowers to find out if what they have for capability of down payment, what they're doing with savings. We would want 2 years tax returns, federal. If you're a self-employed person, we want your business and personal tax returns. We would probably want a rent roll. Depending on if you're buying it as a purchase, we would want a rent roll to see what the numbers look like in the building and see what the debt service ratio would be. In the residential world, there's a lot more stringent credit criteria. With commercial lending, you don't really need to have perfect credit to get a commercial building.
Was good enough.
I mean, we want, depending on where we're going to go with the loan, they want you to be, in the low 600s, maybe even 600, and maybe even lower. Okay, because the rationale is, this is a commercial building, it's an income-producing building. You can have a little bit less than perfect credit and still collect the rent and make the payment. That's basically the rationale for it.
So what if a person that owns an entity, like LLC or something like that, I mean, how does it work?
Most places will let you close in a limited liability corporation, an LLC, but most of the time they're going to want you to sign personally for the note. I mean, there's a lot of people out there that call me all the time and they're like, oh, we want a no recourse loan, or we want to sign for the business name. Very, very difficult to do. I mean, we do have non-recourse loans, and basically what that means is, in a recourse loan, if you get a default and if you go to foreclosure, the bank is able to go after and get a deficiency judgment against you. So let's say you owed $400,000 on a house. They go to foreclosure. They only get $200,000 for the house. They actually can go after you for the other $200,000. Do they? Usually not. But do they have the ability to do so? Yes. In a non-recourse loan, the bank does not have the ability to come after you for the additional $200,000 that they wrote off. So, so that's the difference between recourse and regular loans.
Right. And you alluded to rent roll. What does rent roll include?
Rent roll basically is just going to it's a page. We're looking at how much the building is going to generate in rent. So let's just say you have a 6-unit building and you're getting $1,000 a month for rent. That's the gross, would be $6,000 a month, and then we're going to look at the income to debt structure, what the taxes on the building are, what the insurance is there any flood insurance included if the place is in a flood zone. All this comes into consideration based on the then we run our ratios, how much the payment's going to be, based on how much the building is bringing in, and then based on that, we decide if the debt service coverage is good enough for us to make that loan.
So basically, it's including income and expenses.
Correct.
Right. Okay. So that's what you look at to determine the cap cap rate.
Correct. Correct.
Okay. Got it. So I know that the terms of some of the commercial loans are different than most in residential loans. So can you share what are the terms of a typical commercial loan looks like 10 years, 30 years? I mean, adjustable and fixed? I mean,
yes. Yeah. Okay. In the commercial world, it's very rare to find a fixed rate. Again, as a mortgage broker, I'm always aggressively talking to new lenders and who's out there in the market. So I personally know a couple of banks that are willing to give like a 25 or 30-year fixed rate mortgage. Very, very rare to find. Generally, what you find in the commercial world is an adjustable rate mortgage, fixed for a certain amount of time. So, generally it will be a 5-year fixed, amortized for 25 years. And then at the end of the 5 years, it can adjust based on whatever, whatever index it's based on, whatever the rates are. So it might be based on prime, so it'll adjust up and down after the first 5 years.
Right. Okay. So, and when it comes to commercial loan, does location play a big role in terms of getting a loan?
On the record, off the record, I would say yes.
Okay.
On the record, you're not going to get anybody to say that.
Okay.
But at the end of the rainbow,
why is that?
Why is that? Because no one wants to have
Okay.
the impropriety
Yep.
of saying they're not going to lend in a
Right.
certain area. Okay,
Right.
but are certain areas more preferred? I think people would rather lend in, Cambridge. I think when I send a commercial loan to a person from downtown Boston,
Yeah.
I think there's a lot more players
Yep.
in the area.
Right.
That being said, there are certain banks that won't go outside their lending area. So I have some banks that I do business with in the Worcester County area, and they want to stay in that arena. So if I bring them a deal in Cape Cod, that's not something that they want to touch.
Right.
Not because the property's not good, it's just not in their, in their roundhouse.
Right.
So what I tried to do is I keep local banks, in my portfolio of who I do business with, because sometimes a local bank will take a shot with something that a national lender won't touch, just because they want to help that. They want to build it in their community. They want to be able to say, hey, we just lent money to this person that started a business in, Quincy, and that goes a long way to find a local bank.
Right. And how are the interest rates work in the commercial loan? I know that the rates are a little bit higher than residential loans. I mean, if a borrower, a business person who come to you say, Ted, I need a commercial loan. However, you're going to look at all the required documents and their situation and financial analysis, the property and stuff like that. And then how do you determine the interest rate? I mean, do you determine the interest rate, or just based on each situation's determination, if you will?
Yeah, in this arena of lending, much like the way residential lending is these days, you either qualify for that rate or you don't qualify for that rate. There's no more, we can't help you at 4%, but we can help you at 7%. It doesn't work that way anymore. You either qualify or you don't qualify. So, yes, the rates are a little higher for commercial lending than it is for residential. Currently, we're closing loans right now at around 4% for a commercial loan, which is actually, I think, very
good.
very aggressive.
Oh, yeah.
And me personally, I do have the ability when somebody comes to me that does not fit the bank criteria, cannot support the building, their credit's not as good to go to a bank. Again, as a mortgage broker, I've made a network of private investors that will take a look at a deal and help these people get into that property, whether they want to rehab it and sell it for a profit, or if they want to get in because the banks won't approve them right away, and then refinance it down the line when they have it all rented. I do a lot of that kind of lending.
I see. Okay. And what are the average closing costs? I mean, you don't have to give a number, but just for the sake of discussion, I mean, what are the average closing costs? Just gonna range.
Usually, there's in commercial world, there's usually points involved.
Yeah.
Anywhere between 1 and 2 points, which is a percentage of the loan amount, and then it's your standard. And then it's just your standard costs. Attorneys, they're gonna hire an attorney to run the title to make sure that the title's clear, that you're buying a piece of property that doesn't have any encumbrances or any issues. They're gonna do an appraisal. The appraisals on a commercial building can run a little higher than a residential. I don't want to quote anything too much, but it's definitely higher.
You don't have to. Yeah.
And then we also look at environmental issues.
Yeah.
Okay, so that's something to consider. What are you buying? What kind of building are you buying? If it's a mixed-use building where there's maybe apartments on the upstairs, and there might be a dry cleaner or a bar downstairs. That's a great building to own, but you have to take into consideration that dry cleaner. They're going to ask you to maybe get a 21E, which is an environmental test to see if there's any contamination in the ground. So the bank doesn't want to be stuck with a property that they cannot get rid of. And God forbid there's an environmental problem with an oil spill or cleaning agents. It can run some money. So that's just something to consider when you try to buy a commercial building. What are the ramifications for you? What was the building before you were buying it? Something to think of.
Right. So a lot of analysis involved. Yeah.
Yes.
Right. Now, when you compare to a commercial loan versus a residential loan, now a residential loan where after the loan closes, and a buyer might own the loan for a few years, and if they decide to pay it off, then there won't be any prepayment penalties. What about commercial loan? I mean, would there be any prepayment penalties involved?
It all depends.
Okay.
Some banks do have a prepayment penalty. Some banks do not. Again, it all depends on. When I talk to the person, I find out what your needs are. If you tell me that you're going to be in that building for 56 years, then the prepayment penalty doesn't really come into play. But if you're telling me that you're buying the building, you're gonna borrow some money and you're gonna rehab it, and then you're gonna flip it in 7 months, then we can we talk about that. But a lot of times, most of these commercial lenders, they'll have a buy down prepay. It'll go 3% for the first year, maybe 2% for the second year, and only 1%. So it's kind of a decreasing prepayment penalty. And again, it's case by case depending on which bank we do a deal with.
Okay, that makes sense. So in an average commercial loan, how long will it take to close?
It generally takes 45 days, I would say.
Very similar to a residential loan.
30 days for residential.
Yeah.
I'd say 45 for a commercial if we're really cranking it. The thing that holds us up a lot is the appraisal on a commercial deal, because they're very involved, and the people that do them are inundated. So they're not as flexible to get out and do the property and write it up. And there's a lot more analysis involved, like you said. They're going to be looking at the rent rolls. They take into consideration a lot more information, so it takes a little longer for them to write up the report. And that's the thing that generally, ties us up a little bit.
And the appraisal is very much independent, right?
Correct.
Okay. Yep.
Right.
Just like residential.
Correct. Yeah.
Okay.
The bank will hire the appraiser. You got to be on a certain list, and they know who they're doing business with, basically.
Okay. So when it comes to mortgage rates, I mean, why commercial loans rates are much higher than residential loan rates? Because risk is involved. Is that right? Is that?
Well, I guess traditionally they say risk is involved. I mean, because you're not living in the property; it's an investment property. It's the same thing. It's the same if you want to look at it that way, Calvin. Investment real estate in the residential world is more expensive, and they want you to have better credit. So because the bank is looking at it's risk and reward. They're going to allow you to buy this piece of property, and they're going to allow you to make $2,500 or $5,000 a month, but to the bank, it's a more risky product. That's why they want you to put down more money to get involved. They want you to have good rent rolls. There's more criteria, so they're gonna hit you a little bit for a rate. But I think generally, if you're eligible to do a regular commercial loan these days at a bank or with or myself, you're going to get a pretty good. You're going to get a really, really good deal that you're going to be able to cash flow. Right.
Now, this is out of the box question. You mentioned that if people have low credit scores, I mean, they might be able to get a commercial loan. Like, for example, if people who filed Chapter 13 or Chapter 7 before, I mean, could they still get a mortgage loan if their commercial property generate good incomes?
Yes. Well, we have, like I said, we have a few different investors that are willing to listen to these deals, commercial deals. Yeah. People come to me all the time. They have a building in Boston. They can get it under market value. They need to borrow some money to fix it up. Their credit's not good. They can't show any income, and they can't go to a bank. They can come to a guy like myself, and I can help them get a mortgage for that property and get them into it. Yes.
And have you dealt with any other than conventional commercial loans? I mean, what about hard money lender?
Yeah, that's what I'm talking.
Okay.
Yeah, hard money
That's
lenders.
what you're talking about.
Correct.
Okay.
I also have for investment properties. It would be considered an investment property, 1 to 4 unit. I could do with stated income. We don't have to show tax returns, so we don't. That's another good product that I could offer people on a commercial deal.
Stated income.
Stated income.
Where you don't check incomes?
We don't check tax returns.
You don't check tax returns?
Nope.
Okay. So what are the required for down payment?
That requirement is if you've owned a piece of property in the past, it's 30% down. And if you've never owned anything and you're a first-time buyer trying to do something, it's 35% down. Okay. Okay. We do those anywhere in the country.
And also the interest rates are much higher.
Yeah, the interest rate on that is, again, it's comparative. It's around
Yeah.
8%, but again, if you're not showing your tax returns and you can buy a piece of property that's going to cash flow, it's all, you got to just do the numbers. It's cost-benefit analysis. I do a lot of those kind of loans where people have purchased commercial property at like higher interest rates and for one reason or another, and have come to me, and I'm able to lower their interest rate maybe 5 or 6 points and keep that property on something that's going to cash flow for them even better now. Because again, it's a two-tiered situation. A lot of times you're not able to get a commercial building from the bank, so you have to do it as like a Band-Aid loan. You come to me, we get the property, we make the payments for a little while, we work the numbers, and then we can take you back to a regular bank for a lower interest rate. So, there's different ways that we can do things.
And people still can refinance in a commercial loan, right?
Correct.
Okay.
Yep.
Okay.
We do it all the time.
Okay.
Sure.
Similar to a residential loan.
Yep.
Okay. So, if you want to share one more question or idea, if you will, any advice to a general consumer who doesn't have experience in getting a commercial loan, I mean, what are the first steps that a buyer or a consumer should do before they get into like commercial loan and stuff like that? Or?
I definitely think they should consult a broker, a mortgage broker, somebody who specializes in commercial lending. Again, there's a lot of guys that dabble in this, that do residential, and because the market is a little off these days, they consider themselves a self-proclaimed expert in the commercial lending world, where they lead people down a primrose path. I have been doing residential and commercial for over 25 years, so it's if you look at the blueprint, come to a person like myself, we would put you through the whole blueprint of what we can do for you up front, and then hopefully turn you over to a good real estate broker who can show you properties, and it'll be a match made in heaven.
Well, very good, and I want to thank you so much for sharing, and thank you for being here as well.
I appreciate it. Thanks for having me.
Thank you. So when it comes to commercial loans are unique than most residential loans, because commercial loans will have or is having stringent borrowing guidelines. They require at least 25% plus for down payment, with thorough financial and also risk analysis, cap rate performance, and also high interest rates. So when you decide to get a commercial loan, you should consider these requirements before you talk to a mortgage broker, or if you do not know these requirements, it is always a good idea to talk to a mortgage broker who specializes in commercial loans, because commercial loans are much complicated.